Okay. Hello, everyone. Hello. This is Charlie Tian. I'm the founder and CEO of GuruFocus. Very happy to see you. A few users are here already, and I'm in Plano, Texas. Let me know where you are, and I always love to hear from you. And I see quite a few people here waiting already. Yes, I'm in Plano, Texas. The weather has been uh, much better actually this week. It was more than 100 degree, 105, 108 for quite a long time, more than 2 months. This week has been the weather is great, and next week seems to be fun too. So it's about 80 something degree. It's about, I would say in Celsius, it's about 20 something, 24, maybe 25. But it's very pleasant. It's hello, thank you all. Thank you all from different places, California, Romania, Hungary, Colombia. Wow, okay. Boston, Susan. Okay, that's great. As always, whenever you have questions, feel free to ask me. And you can just type in the chat area and I will be checking it. And I will get to your questions whenever whenever it's a good time, and I always try to answer every questions I got. Okay, before I start, I want to talk a little bit about the recent market. We know that the market has been volatile since last month, and there was a Japanese yen carry trade scare. Market was down about 10%. Yesterday it was down more than 3%. Nasdaq was down more than 3%. NVDA itself was down close to 10%. So where we are with the valuations, let me share my screen with you. And valuations actually, and valuations actually, and valuations actually, and valuation is actually not very good at this point. And let me share my screen with you here. Yes. Yes. Look at this chart. This chart is actually on my front page. It's SP and SP 500 GF value chart is here. If I click on the chart, and it expands to the full screen, and it shows you the valuation. Actually, the current valuation is about here, and the historical valuation, it's a valuation since about 2004, beginning of 2004. You can see that the black line is the fair value as we think where the fair value is. The blue line is the SP 500 price. And you can see that in recent years, 2022, the market we had a bear market. The market was down about 20 something percent, and valuation was reasonable, and from high to reasonable to low, and to a relatively undervalued valuation. And then the market went up almost like straight, and in before August, the valuation was the highest ever. And then we had a correction, about 10% correction. Then it went up again. Yesterday it was down about 2%, 2 something percent. So if we look at overall, the valuation is still quite high. I would say it's not, the market is not cheap. It's quite high still. So when valuation is high, the risk is high. So I was caution everyone to be careful, to be cautious in this kind of times, to be cautious and invest in good companies, and especially if they're traded at reasonable prices. And here we can see that which market has done better, which market has done well. And we have a chart. This is the US market, different sectors and different market caps. And recently we actually added a feature which you can expand it to cover the entire industry. So for instance, we want to know among large caps, which industry did the best. So I just click on here, among large caps, which industry did the best. And I just click on here. And also, for instance, if you want to know which among the Mag caps, which company did best? This is today. If I want to see year to date, for instance, year to date, the Mag caps, which industry did the best? Actually, we thought maybe it's technology, but actually it's retail, defensive retail. If I click on it here, it will show us which companies did the best this year, year to date. It brings us to the all-in-one spinner. Okay, it says no. So I think we need to, yeah. But it should appear. Okay, it should bring us to all the companies that did the best during the year to date. If I click on here, and yeah, these are the companies. Okay, because in retail there's no company probably which can qualify as MedCap. This is between 10 to 100 billion, 100 billion in market cap. If you want to see the year-to-date performance, I just tap year-to-date here. So year-to-date total return, and if I display this column here, it will show us year-to-date total return for large cap retailers, the year-to-date performance. Mostly they are up, and for the mega caps, if we do the same thing, and if I click on here and I want to find out year-to-date total return, I just turn on this year-to-date total return display here. Okay, actually Walmart and Costco, they did really well this year, and Walmart's up almost 50%. That's quite surprising. I didn't pay attention to it, but we can see that it tells us which sector did the best this year, and which sector and which market segment. You can click on that. Of course, which one did the worst? The personal service did the worst, and home building did poorly. Home building did very close to the worst this year. We understand that due to high interest rate, there were okay, we probably need to fix some problem here. Okay, that's this feature. You can close it and then check out the sector performance. Of course, you can click on it to check different time year to date to see which sector did the best. Communication, financial service did well actually this year, and yeah, that's the market. So which market is cheaper? If you want to know which sector is cheaper, you can just click on the, for instance, U.S. market. Then go here. We have the different industries, and we display their P/E ratio, their Shiller P/E ratio. And if I just display Shiller P/E ratio, it says energy actually is cheap at this point. The cyclical financial service is cheap at this point. Yeah, that's defensive industries, tobacco products. Okay, those are cheap. And if you're income investor, you can also look search for the industries that has a highest dividend yield here. Actually, if you just scroll down, we do have a bar which allows you to switch, dividend yield. You can sort by dividend yield. You can check out which industry has the highest dividend yield. Surprisingly, it's asset management has a highest dividend yield. If we click on that, you can see that different performances, year-to-date performances actually did overall pretty well. and then you can check the dividend yield of different companies. Okay, that's a more macro, the overview of what we have. Okay, let me see what questions do we have. Yeah, feel free to ask me if you have a question. Jonathan has a question. Jonathan, is there a tool that on GuruFocus to check if my portfolio is on efficient frontier or how to get there? How could I actually am not sure what your definition of efficient frontier is. If you can explain that, maybe I can help more. Any chance, John's asking, any chance for attribution analysis for portfolios? Yeah, please explain your questions. Sometimes when the question is more generic, I'm not sure what you're asking. If you can be more specific, and of course you definitely understand your question, but sometimes if it's not specific enough or I don't have that knowledge, and I may not be able to answer at this point. So yeah, if you can explain more about your questions, I will be able to help you more. Thank you for that. Yeah, now if I want to introduce you a tool we actually developed, we're still developing, and we're still working on it. It's called the GuruAI tool. It's a AI tool that we hope to help our users to take advantage of data and tools and data and tools we have, so that you will know that about, you can ask questions, you can find things. So for example, we can ask, how is AI growth with Microsoft last year? So you can ask these kind of questions, and it will try to grab data from transcripts, from our database, and from filings, try to grab data and analyze it and to answer your question. So it may not respond immediately, but see here, I was asking Microsoft AI thing, and it answered. It says AI service, Azure AI service increased by more than 100% for 5 consecutive quarters. And okay, OpenAI service with more than 200 customers, including KPMG. Okay, GitHub Copilot with more than 1 million users. Okay, then it says overall Microsoft AI growth has been robust, driven by different services. Okay, then we can continue to ask. I want to ask growth overall growth last year. I want to ask the growth. What was the growth rate overall? Let's see how. Okay, excellent. Okay, I'm not sure what. Okay, let me. It's a beta version. We're still working on it. Let me try again. Was the growth rate? Maybe I didn't understand the question. I'm trying to ask the growth rate. Okay. Then I can continue to ask what how is the valuation of Microsoft stocks? This is a tool we're working heavily on it, and we will try to make it more useful, and hopefully you will be able to use it in your research. And yeah, that's something we're working on. And let me look at the question. Okay. Jonathan, is the efficient frontier the set of optimal portfolios that offer the highest expected return for defined level of risk and lowest risk for a given level of expected return? Okay, I see what you're asking. And but I mean, this can be quite subjective, because no, we can have a definition of expected return, but this is never guaranteed. Our study found that the stocks with the highest, let me go to a tab. Our study found that the companies, the stocks with the highest GF score valuation have a higher long-term expected return. So basically, if you want to optimize with our system, you probably want to have higher GF scores. For instance, Microsoft, in this case, GF score is 98. And if I go to Netflix, the GF score is 93 out of 100. And we found that the companies with the highest profitability rank and the growth rank will do well over long term. So the expected return, it's really a personal opinion, but it depends on the time span, how long you're looking for. But in our opinion, you should invest in companies with high profitability rank and high growth rank. I'm not sure if I answer your question, Jonathan. Okay, Patrick's saying that, okay, my Nova Nordisk position is up 600%. My opinion, okay, he's asking about this stock. Let me take a look. No, congratulations, first of all, your stock is up 600%. That's a lot. That's definitely a lot. This is a Denmark company, and it's up 600%. Really? Am I looking at the right company? My data shows it's up only 31%. It's not 600%. Okay, you are talking about long term. Okay, I'm sorry. I'm sorry. I was looking at just year to date. So probably you have a long term holding. You have a holding of more than 5 years, more than 10 years. Looks like you hold it more than 10 years. So if it's congratulations on that. The growth rank is still great. If you look at growth rank, it's still 10 out of 10. And the future growth is more than, it's close to 25%. That's great. That looks really good. The profitability rank is also very high. The GF score is 94, which is not bad at all. The valuation is maybe a little bit overvalued, very overvalued. And I think it's a personal decision. If I own this stock, I wouldn't be selling it. I think it's hard to find a good company. Sometimes once you have it, and especially in the US, if you sell it, you pay lots of tax, and it's maybe better off to hold it as long as the fundamentals are still good. I would say I wouldn't do it, but I don't give personal recommendations. It's just my opinion. It's a pharmaceutical stock, and sometimes the patent can expire. Sometimes, so it's not just valuation. It depends a lot on the future business perspective, which I don't know about this company I don't know very well. So I don't give recommendations, but that's my personal view. Okay, Yoram is asking, what about ETF performance? I'm not sure which ETF you're asking. Please explain which ETF you're asking. Okay, Professor Ken, how do I ensure that LLM does not hallucinate answers? And I'm not sure. We are still working on it. I think you're asking about AI, GuruAI. Yeah, GuruAI does use ChatGPT 4.0 at this point. Okay. Professor can ask what stocks has GF score between 99 to 100. You can do that with our all-in-one screener. With all-in-one screener, you can screen the by GF scores. Here, the GF scores here. Okay, for instance, if I tap on enter 100, the GF score will show you a company with the highest GF score. Lots of familiar names here. Usually we know that the GF score usually wins high, and usually only very good companies can qualify. If I don't want the OTC stock, I just want the stocks that are traded. Okay, these are the stocks that are that has a higher GF score. The ones we're familiar with are Microsoft and NVDA, Google, Asmail, Adobe. Yeah, all this has very high GF scores. But do your research. Please do your research. And this is a screening tool. Our model tells you it may do very well statistically, but please do your research. RMD, actually, I think we talked about this company last month, and it has been doing very well actually over past months. Now it has a higher GF score rank. And we do have a model portfolio here, which tracks the past performance of different ranks of GF company with different GF scores. You can see this red line. It's since inception, it has been outperforming the SP 500, but recently it come down more. And I'm not sure which company dragged it down. I don't. But the company with lower GF score did much worse than the SP 500. So it just it shows you that the GF score does matter. So it does matter, and statistically, as we track with model portfolio, the over long term, only the companies with more than 90 and above GF scores are outperforming SP 500. Others are not. So it does matter. Okay. So what stocks, Professor Keynes continue to ask, what stocks has a GF score of more than 10? I mean, profitability rank of more than 10. You can filter with our all-in-one screener. You can filter here, just if you want to have profitability of more than 10, it's here. Profitability rank more than 10 and the growth rank more than 10. You just filter it here with the all-in-one screener. You'll find the companies that meet the requirement with both 10. I think we have, okay, we have other limitations here. If I clear I've cleared all the industry. Okay, can see that the company with the highest rank of profitability rank and growth rank. Not surprising, Apple, Microsoft, NVIDIA, Google, Meta, TSM, Novo Nordisk, just the one that Patrick mentioned. So yeah, they do have very high rank. Visa, MasterCard, those two are not doing really well this year, but they have very high ranking. And I personally own both of them. Okay, yeah, you can use our all-in-one screener to filter for it, and it's easy to do. And once you filter for it, you can look at the chart. You can look at the chart. The chart will show you the GF score chart, the GF value chart, the historical revenue and earnings chart, and also the income statement breakdown chart. You can look at all of these companies, and then you can do a backtesting because you want to make sure that it does work. You can do a backtesting. Just click on backtesting, and if, for instance, if I want to test what backtesting for last 5 years, starting 2019, and I rebalance every 6 months. I just want the companies with a growth rank, the highest growth rank, and I want 20 stocks, for example. And then I click on go. It should start to start to, okay, I have lots of OTC stocks, but it doesn't matter. We can look at the performance, and but they all have a very high ranking there, and I will rebalance every 6 months. Let's see how the portfolio does. Yeah, now it's finished, and okay, yeah, this is a portfolio. If I remove this, so actually, okay, it actually just similar. The return is similar to the SP 500. Looks like return about this portfolio is similar to SP 500, in this case, and yeah, then of course, if I remove the ones, if I don't want OTC stocks. If I just want 10, I just want the best ones. For example, I just want 10, I don't want 20. And then if I do it again, and let's see how it does over the last 5 years. So I just want top 10, and yeah, and I remove this. So now this time, if I have 10 stocks, it outperforms the market much more. So that's when I have 20, because when you have more stocks, it tend to it's harder to outperform SP as a market, because as Warren Buffett said, that's why Warren Buffett always has a very concentrated portfolio. Um, yeah, that's how the backtesting works. You can work more on it. I'm just showing just a rough idea how it works. And lately we added a different parameters here. The alpha of this backtesting shows 0.69, beta higher than the SP 500. Sharp ratio 0.41. There's also Sortino ratio, which is 0.6. If you want to know what are they, just put mouse on it. It will show you what they are, and what they stand for. Okay, let me look at more questions. Seems like we have more questions today. Carlos asking, when we calculate DCF of a company that has high intangible assets, do we use different formula than the traditional company with hard assets? We don't. Our DCF model, if I come to a DCF model, DCF page, the DCF model is actually a very simple model. So it has two stages. It has a growth stage and terminal stage. That's why terminal stage and growth stage. Regarding to the intangible assets or hard assets, if you want to, it's really personal opinion, and we provide a book value here, which includes all the intangible assets and the tangible assets. But you can choose to add it to the intrinsic value or not. You can choose to add it here. You just click on this. You can add to it, and you can also adjust it manually. In this case, it's 16 per share. So you think it's just worth 10, so you just manually. You can change it to yeah. If you think it's worth more, 100, for example, yeah, you can add it 100. So it's more a personal opinion, but we do have this tool here for you to adjust yourself. So yeah, Carlos, I hope this helps you. I think it's per company basis. You need to look at the company, what are included in the assets, hard assets, or intangible assets. Sometimes intangible assets worth more than the tangible hard assets. So you need to look at the individual, the company per cases, specific cases. You can then use it to here to adjust it to the fair value here. And yeah, for DCF calculator, it's all there are lots of personal opinions here, like the future growth rate and the terminal growth rate. the discount rate. It has lots of personal feelings here. And currently for discount rate, we're using the 10-year Treasury rate plus 6%. So that's why currently it's 10% now. If interest rate goes down, the discount rate will go down too. So then the valuation will go up. In that case, the valuation will go up. So that's why, okay, Warren Buffett said that interest rate is like gravity. When the gravity is high, then everything flows lower. So that's a part you need to pay attention to. I hope this is helpful to you, Carlos. Okay, another question. Professor Ken, about AI. Yeah, please try different questions. We're still working on it. Sometimes you do get sorry replies. I'm sorry about that too. We're still working on it to fit more data in it and to fix the bugs. I think it will be ready quite soon. Okay, Patrick. Okay, where do we get your growth projections? The growth projection actually is from the estimates data here. We do have estimates data which we added not very long ago. They are from Wall Street analysts, and so they are projecting future fiscal year revenue and earnings. They project for that. Then with that, those data combined with the historical data here, and we calculate the future growth rate. For instance, in the case of Microsoft, the future growth rate is calculated as 14%. As with all calculation, we use the least square regression for the growth rate calculation. So Microsoft is projected to grow about 14% a year. That's tremendous. That's tremendous growth for a company like Microsoft. So if we look at your company, Nordisk, okay, we can look at that. The future growth rate. Yeah, the future growth rate is even higher. So 21%, earning will be about 25%. So the dividend per share, grow 33%. Wow, that's quite impressive. The growth is tremendous. That's a good pick for you. You gained a lot on that. Okay, let's look at the dividend. The dividend is about 1% at this point. Dividend payout ratio is 47%. The dividend growth rate is really high, 12% average over the last 5 years. So the stock dividend can be high. Sometimes in 2016, the dividend was more than 4% yield, 4%. So this seems to be a pretty good pick. Congratulations on that. Okay, let me look at the companies you're talking about. Marlboro. Okay, not another heard. Okay. So Marlboro, maybe. Okay, this one. Let's take a look. Okay, it's a small company. It's very thinly traded. Seems like very thin. This is maybe this. Okay, this is okay, this is you need to come. Let's come and now come. It's a Poland stock. Seems like the primary exchange is a Poland. Poland is Poland, and yeah. Let's look at the growth. Yeah, not a lot of data. Yeah, there's because for this kind of company, very few analysts will cover it. 2 to 6 analysts are covering it. So then the data will not be very much. So for future growth, still looks like quite high future growth, and it beat the market a few times, missed a few times too. The stock went up a lot over last 10 years. This year is not doing very well. And yeah, last 3 years not very well. Last 5 years it was okay. Um, yeah, but looks like future seems to be growing. The analysts expect it will grow faster. And the growth has been slow over the last few years, was declining actually, revenue is declining over the last few years. So that's I don't know the future growth about this company. I never study. I don't know this. What I don't know about this company, but that's the data. What the data shows. Okay, think physical. Thank you. Hello. And what GF value rank? Okay, GF value rank specifically RKLB. And let's take a look. RKLB. Okay, Rocky Lab. Rocky Lab. What does this company do? Let's take a look. I don't know about this company. The company building rockets. Okay, engaging space and building rockets and spacecraft. Okay, similar to SpaceX seems like. Okay, let me back to the top here. Yeah, the stock has been doing poorly, and it has a profitability rank of 1 out of 10. The growth, we don't have a growth rank for it, probably because it doesn't have a long enough history. We look at the revenue. Revenue growth has some growth, but the company has been losing money every year, losing more money every year, and burning cash. Cash has less and less cash and more debt. So it's a startup. It's this happens with startup. This happens a lot with startup. So in this kind of case, for this kind of company, okay, we give it a GF value rank of 8, a GF value rank of 8. So if, because analysts are expecting more growth, so market is expecting more growth, seems like growth seems to be, growth, if you look at the future growth seems to be expecting revenue growth expected. The loss seems to be less and less. Revenue growth, revenue seems to be more than double in next few years, next 2 years. But as investing in any startup, the key is you need to be cautious about the risk. Overall, we give it a GF score of only 57. So it's a very risky investment. As a company is not making money and has no clear future that it will make money in the next 2-3 years. The company seems to be continue losing money. Maybe it will lose less. So you need to be careful with this kind of companies. And valuation, I would say that for this kind of company, valuation is secondary. Survival is primary. So you need to be concerned about the survival first. Then you think about the current stock valuation. I wouldn't be investing in this company. I would never invest in this kind of company. For my requirement, I always require the company that has high profitability rank, and it needs to make money, and it cannot be losing money. In this case, it has a profitability rank of 1 out of 10. So, and it seems big financial distress, as we indicate here with Altman Z-score is in financial distress, more money, burning cash, and more debt, and losing more money. So that's overall situation. Okay, thank you, Patrick, for your comment. Okay, Mac plays a company like MHO. Let's take a look. I don't know about this company. M&I Homes. M&I Homes. Okay. We see the company is overvalued, quite overvalued here, and the profitability rank is pretty good. Momentum rank, okay. Growth rank is good, so the rank is good. GF score not bad. 86. Okay, what are trying to stop? GF value. We think that why we think it's overvalued. GF value is 1 is because it's far more than the it's far more than the GF value. And GF value, I think, is worth only $72, but the stock price is more than double of that. And yeah, why we think, although the P looks very small, the P ratio is only 8. So why we think that the company is overvalued? The reason I think in this case is mainly because the company is in a cyclical business, and it's in a cyclical. So the earnings is actually quite high. The earning last few years, if you look at the 30-year, okay, let's look at the Interact chart. We look in the Interact chart, and consider that revenue is growing pretty well. Okay, let me do a trading 12 months revenue. Okay, trading 12 months revenue, and then we also put earning per share. Oh, I don't know where it is. I just search for it. Earning per share with estimates. Okay, we can even put estimates there. Earning per share. We have revenue there. We have earning per share there, and yeah, we have it. They're all on the same chart. The reason we think that it's overvalued is if I want to make it easier. So I only display the price and earnings here. The chart earnings. The reason is because the company is in a more cyclical business. You can see that before 2008, it has more earnings per share than it had in 2018, so 10 years later. And in the last few years, earnings went up a lot. But you can see the stock price grew much faster than the earnings. The stock price grows much faster than the earnings. And we in this kind of case, we tend to compare, because it's a cyclical business, we tend to look at the PS ratio, price to sales ratio, instead of price to earnings ratio, because the business is cyclical. So if we look at the price to sales earnings, price to sales ratio here, this green line, it's a price to sales ratio of the MHO, this company. Consider the price to sales ratio is at historical high, at the highest level that it has never been in the business in the history of the company, more than 30 years of the history of the company. So that's why we kind of think that it's not sustainable. It's not worth such a high price to sales ratio. That's why we think it's overvalued, and GF valuation is low. That's how we think. Okay, Mike, please. Hope that answered your question. Susan, okay. Given estimates are based on analysts' expectation, do you have an overall opinion on its accuracy and objectivity? It's a broad question, but wonder what do you think about their reliability? Okay, that's a good question. I think lots of people don't kind of disdain the revenue as an analyst, but I think they're as overall as revenue estimates. They give pretty good estimates. We know that sometimes the company beat, sometimes company miss, but overall usually the miss and beats earnings estimates are very small, although it can make big change to stock prices. But usually the percentage is quite small, and overall, analysts as an average, they do a decent job, I would say. But yeah, sometimes, of course, some companies don't have much analyst coverage for small companies. Okay, Jonathan's. Well, all the startups at the beginning of the same situation, losing money. As another company, which I believe interesting, Planet Job. Yeah, you're right. All companies are lose money. Most companies lose money at the beginning. Yes, that's true, and they lose money, but you still need to distinguish, I would say. some business are just easier. Some businesses is harder. Like Microsoft, when Bill Gates started his business, and it was easy to turn a profit because it's a software company. It's a capital light business. It doesn't need lots of capital expenditure, capex spending. That's also why Warren Buffett likes low capex businesses. The overall risk is small. And the company we were talking about, the Rocket Labs, it's a hard asset business and needs lots of money. It needs more money than car companies. So it needs heavy capex spending. In this case, the risk is higher. So you do need to distinguish them. Of course, well, maybe if they make it, usually they have higher, uh, they have wider moat. It's harder for other companies to get in, but they always need lots of capex spending, which makes the business more risky and harder for the operators. This here remind me of the book written by Nike founder Phil Knight. Nike, we all know what Nike does, make shoes, and we wear their clothes, wear their shoes. And I recommend his book, his biography book, Shoe Dog. Yeah, please read that, Shoe Dog. The book's called Shoe Dog, and I recommended it before. It's one of the best books I read in the last few years. And he was describing just how hard the business was, as that he was always borrowing money. He needs money. He needs money to buy the shoes, to sell, to build factories, to make shoes. It was so hard, the business, because always needs capital. But Bill Gates wrote a review of the book, Shoe Dog. Bill Gates wrote a review, and in the review he said that he was lucky that with Microsoft he didn't need lots of capex spending, so life was much easier. And it's just different type of business. And for the hard assets business, those that need lots of capex spending, it's much harder to survive, and it's much harder to grow. And especially at time of high interest rate, high inflation, it's even harder. So it's just my opinion, and of course everyone has different area of expertise. If you're expert with that, maybe you can invest in it. Okay, let's take a look at the Planet Labs. What does this do? I think I've heard about this company, and okay, it's Earth imaging company. Provide daily satellite data. Okay, provide satellite data. Okay, I see. It provides satellite data, and the stock. Okay, stock is it has a profitability rank as 1. Again, stock lost a lot of money. Lost investors, and almost anyone investing in it has lost money since that. And maybe you can make big out of it, but it's not for me. It's definitely not for me. Okay, let's take a look at more questions. Yeah, feel free to ask me questions. I think today we had some very good questions, and okay. If Jonathan said, if I think in the future the company isn't now the right time to try to help her and me reach the next stage, and it's your preference for investing. Okay, Patrick asks, how does your valuation chart, fair value chart determines which multiple is suitable for measuring all different companies, all different sectors? That's a good question. We kind of look at more of the historical valuations, especially for mature companies in terms of historical price to sales, price to book, and price to earnings for some companies. And then we tend to with a longer history. Then we decide a more reasonable valuation. We trust the market here And although market is not efficient sometimes, but in most of the times, market is quite efficient, in my opinion. And so that's why we rely on the historical valuation to determine a more reasonable valuation for future. It's not always accurate, but I think the historical is a good reference. Although in investing, we always see the future performance is not okay. The past performance is not guarantee for future performance. But to be honest, for future performance, the best reference is the past performance. It's just if a company has a good history, it has higher probability of have better history in the future than the company that has poor history. What are my favorite screening indicators? And I love, in general, I love companies that has good growth and good profitability. And I make lots of screenings here. You can use this company, this actually high quality ones. I was talking about capex, high quality with low capex. I made this quite a while ago. I think I made this filter I made this screener in 2016. And when I made it, I also created a portfolio which tracks the performance. Okay, yeah, it's here. When I was writing my book, Invest Like a Guru, I screened it and created a portfolio tracking the performance. It's called, Good Companies for the Book, August 5th, 2016. So I created in 2016, about 8 years ago, and then the list never changed. I don't think we changed the list. And we can look at the performance if I just go back to my older portfolio view and look at the performance since then. Some are delisted. Although delisted, they're actually bought by different companies. Although here it shows underperforms, but actually it was purchased by, acquired by other companies. And if we look at this, okay, yeah. Overall, the gain was 160%, outperformed the market by 7.4%. I think it outperformed more than that because these two are dragging it down, and also this one was dragging it down. The company was not really delisted; they were acquired. But then we look at these companies, and some outperform a lot. It's called Old. I think this company, Old Domini, Friedlands, I own it in my personal portfolio, outperformed again about 700%. And this one, WW Gringer, again 300, more than 300%, and outperformed. So that's the list. I think this list overall did pretty well. And it's so again, it's called high quality, low capex, and I created this long time ago. But as today, if I do it, I will ask a higher profitability rank, and maybe a higher growth rank. I may relax some other parameters, and but I do require high growth rank and profitability rank. You can see that these are the companies that pass the screen. Okay. Okay, can I explain the difference between GF value and the valuation rank? That's a good question. Okay, I just come to Nike. Consider Nike is significantly undervalued. It's far below the valuation line. GF value rank is also is 8. But our study found that it's not always the case. It's not the case that the more undervalued it is, the higher the better. The stock will do better. Not always. The market, as I said, is quite efficient sometimes. Lots of times, the stock is undervalued for a reason and for a good reason. So stock will not do well in the future. If you want to know more, yeah, click on here. This question mark here, and I have written about it in detail. Explanation how the GF value rank works, and in very detail here, all different rank works and the past backtesting data, and also this is an ongoing monitoring of performance. It updates, I think, weekly, at least weekly. So you can look at different ranks and the results of different performance. Take a look at that. Let's okay. Why? Okay, yeah. This comes to Lulu. You want asking exactly what I was trying to say. Yeah, in Lulu's case, it's very undervalued, but we don't give it a high GF value rank. The reason is because we found that it's only within a certain range when it's undervalued and stay there, it will do well in the future. But when it keep going down, and now it's not it's really not good. At least our backtesting shows that. So that's why we give a lower valuation rank there. Okay, how much of the trading investing today is made by humans versus computers? I wouldn't know. I wouldn't know the answer to these questions, at least. I think they're not exclusive. At least in our case, we use computers to filter, to gain quickly the information. Then we studied ourselves too. We studied manually. So in this case, they're complementary. They're not like exclusive. So do we have more questions? We don't have much time left. And I was very happy to see lots of people today. Last month we had some technical problems so that we couldn't send emails out. But today we have a lot more people. Yeah, feel free to ask your questions. I think the computer can do 80% of the work, definitely. Screening is much easier than we use our own personal opinion, personal experience, and knowledge on it, which cannot be replaced by computer. And then we make a decision. Thank you all very much. Okay, one more question. On the scanner, we can add GF value rank and valuation rank from 11, 4, and 8. Yeah, valuation rank is something I think we did earlier. I think it's more proportional to the undervaluation of the stock. Okay, we have more questions. Let me continue. Okay, we have what's my opinion on NNE? Okay, let's take a look. NNE. Okay, nano nuclear energy. Wow, that sounds very fancy. And but when it sounds very fancy, you need to be careful. Although I was a physicist. And let's take a look. What does company do? It seems like it's a nuclear energy company. Okay, early stage nuclear energy company. Yeah, again, for this kind of business, it's capital heavy. It needs lots of capital investments, and it may not generate revenue for a long time. In this case, it never had a revenue. I'll just say that it's not for me. And good luck with you. Good luck if you want to invest. It's not for me, certainly. Okay, and Jerry's saying that email setting in portfolio not working well. Okay. And mark some portfolio, but please open a ticket for that. It's better to open ticket and that so that our technical team can track and can follow up on that. Yeah, you can always, again, you can always open tickets, support ticket with us. Let me go back to the screen again. You can always open support ticket here, create ticket here, and you can also chat for quick chat support. You can chat with us. If for a bug, it's better to open a support ticket here. You can also schedule a one-on-one meeting with one of us. In that case, we can guide you, give you a one-on-one tutorial on how to use the website. Of course, I'll be back next month, and I'll be back in October. Next month, it'll be October 2nd, always the first Wednesday of each month. So it'll be October 2nd, 1 p.m. US Central Time, and I will see you next. Yeah, we do have a Discord, but it's not very active. And thank you for asking. Yeah, see you next month, and looking forward to. Thank you all. Bye.